Hey, what's going on, everybody? Welcome to another episode of Global Cap FX. We are pushing right along. If you guys have not seen the last video that I uploaded yesterday, literally yesterday, Technical Tuesdays went up. And then as of how things were looking with the trades that I was eyeballing, we're still somewhat of a limbo stage, but still holding true to what I'm hoping to see transpire with the pairs that I had on the Technical Tuesdays video. I also had some very big news when it came to being able to provide financial advice and suggestions on this YouTube channel. Mind you, right now, full disclosure, anything that I say on this video or any videos for that matter on this channel are not financial advice until further advised. Okay. So anything that you take from this channel, from these videos, and you implement into your strategy is done at your own risk. The losses and the wins are your responsibility. Okay. So if you haven't watched it, man, go ahead and take a look. I think you will really be excited about what's to come for GCFX, the students, the funded traders, and the potential equity partners for the big news that I released on the last video. Now, with that being done and talked about, I want to tap into the psychology of the market when it comes to the middle of the week. Now, it doesn't happen all the time, but usually when the market's open, it does three things. Takes off, goes in the true direction, takes off, and goes to retest the previous area of support or resistance before a continuation to the other side. Or it just kind of just stays in limbo and consolidates for the first couple of days. Now that we're here, it's Wednesday, August 31st, and we are just about ready to tap into the September. We have one more month left of Q3, and then we'll be full speed ahead into Q4. So I hope you guys have been really locking in on your disciplines, locking in on your strategy, and ensuring that your risk to reward management is ironclad, man. Because when you do that, you give yourself an opportunity to be profitable for the day, profitable for the week, for the month, for the year, when you have proper risk to reward management, right? So make sure that you are keeping to your disciplines as we go into the last month of Q3. All right, so I'm going to go ahead and share my screen really quick, and we'll take a look at GBP JPY because I want to touch on that one more time. All right, so let's go ahead and take a look at GJ in the daily time frame. Okay, so the way that I see it is that price has been consolidating for quite some time. Okay, it's been consolidating for quite some time. And if we look at this from just a very macro standpoint, okay, just looking at this area right here, what I see is that price at the very top here had two high points. You can call it a double top if you want. Technically a triple top with that retest that took place right here. The pink circle that I have over the wick right there, that shows liquidation of the previous high, taking out people's stop losses before continuing down. Now, the way that I see it, now that we have been making gradual descents, let me get rid of that. Now that we have been making gradual descents in the market, we would obviously be looking for an area where price could continue up higher. Now, naturally, retail traders, they would try to get ahead of themselves, right? They would try to get ahead of themselves. And they would try and look for they would try to look for sells in the market before the market actually showed you that it was going down. And when I say show you, I'm talking about, multiple confirmations in the market. I'm talking about break and retest. I'm talking about impulsive moves outside of consolidation, right? I'm talking about engulfing candlesticks. I'm talking about previous institutional moves that took place in supply and demand zones. It's important that we are looking for these types of things before we actually look for a quote unquote reversal. Because right now we're in the 3-day time frame, and if we really look at this thing, man, like we've been going up on a bullish trend for the last almost 900 days, almost 3 years, right? We've been going up for this pair. So why would we look for a short when for the last almost 3 years we've been going up? Why would we do that? That just puts us in a situation where we are potentially, losing more than we're winning. So the way that I like to teach my students is make sure you're trading with the trend, right? So, based off my video that I made yesterday for Technical Tuesdays, I did have this making a little push to the downside, maybe filling in some areas of mitigation. So as of right now, as we go down to the 4-hour time frame, I'm looking at this right here, as a place where, price made its last push to the upside, right? It hasn't really come down to retest that area, and sometimes the market doesn't come all the way back into the demand zone. Doesn't always come back into the demand zone. Sometimes it'll just come down here, fill these areas, fill these areas where wicks didn't take place. So as you can see, as this move was going up with these last three candles right here, there weren't many wicks in this area. So like this candle here had a very small wick at the bottom of the body, but that means that it has this whole area to fill, which it has filled as of late. And then we have this general window to fill, which it has, okay? So the way that I see it, price could potentially start moving to the upside now. Or what it could do is it could eventually come into the demand zone. And that's where, things can get tricky for retail traders is that they don't know when to get in for buys. And the only reason why we're psyching ourselves out getting in too early is because we're not looking for those multiple confirmations that I just explained. So midweek reversal, that's the topic of this call, midweek reversal. So the the last couple of days, the last 3 days, we have been going down, okay? Without going down into a smaller time frame, I want you to be able to see where potential retests could have taken place, okay? So with this black candle here, obviously we had an impulsive move to the upside. Price impulsed above this area. Let me go ahead and get this here. Price impulsed above this general area right here. And then the last 3 days, we have been in a corrective stage. Corrective meaning, price is coming back down into a zone where liquidity happened. Liquidity are are the wicks. They're the wicks that at some point they appeared like candles like this, full body candles. But with these ones here, as you can see, you have these long wicks at the ends of the body. That means that price is starting to show some weakness to the downside, okay? Another confirmation here is that I see, these two candles, these two right here, these two. as a candle rejection. So you had this blue candle pushed down below these candles here. So naturally, retail traders would think, okay, this blue candle just pushed out of this consolidation zone. It's time to sell. And then guess what happens? The next candle completely rejects that blue candle's movement. And now we're back into the consolidation zone. So this pair right here signifies that, price still isn't done being in this consolidation for one. And then for two, this spike down could be a higher low to this. Okay. So now if you look at it, this could be a channel that is starting to form to the upside. All right. So we have a rejection set of candles here. We have some liquidity right here, which is taking place inside of this pair. So you have all this liquidity right here. Last 3 days have been corrective in comparison to this black candle here. So there's a possibility here that we could be looking for, a push to the upside finally. So let's go ahead and go down to the 4-hour time frame and get a little bit more specific about things. The way that I see it is that I wouldn't get into a trade. I wouldn't get into a trade unless it got above this area right here. I needed to push up here, break above that, make a retest of this general area here, okay? And then push to the upside. Or what'll happen is that price will respect I'm having trouble with my mouse here, hold on. Okay, price will respect this blue candle's impulsive move to the downside, and we would declare this a supply zone. We're in the 4-hour time frame. Like if I went to the 15-minute, you would see that there are supply and demand zones in every single time frame, right? And as you can see, prices, it's making a little push right here, but we'll see what happens when it closes here in the next 20 seconds, is if it closes like this, or does it make a big wick like these two here? That'll kind of tell us, is it ready to head back down, maybe come back down into the demand zone and fill some more of this area here? Or is it going to give us a sign of bullish movement by breaking above this orange box and then retesting it like I just mentioned? So there's two things that can happen. And at the end of the day, your job psychologically as a trader is not to fall into the trap of getting in right now, because it hasn't showed you a damn thing yet. You have to wait for multiple confirmations, okay? You don't just wait for it to get into a supply and demand zone box and then immediately get into a seller buy. You need to wait for more confirmation. You need to wait for, push out of some sideways movement and then a retest of that area. A prime example of that, let me go ahead and go back to the 4-hour time frame here. All right, so a prime example of that would actually be this right here. So let me get rid of all this. I don't need to have all these markups. Okay. A prime example of that would be this right here. So, undo. So this area right here was consolidation. I'm going to put a box around it, and then I'm going to go into a smaller time frame here. and go to it in the 15-minute, let's say. Let's go ahead and find it. Okay. All right. So this area right here was an area where price could not break through for quite some time. So you had this right here, you had this right here, and then you even had this right here that kind of fooled some people to think that it was going to start moving back up, similarly to these moves here, but it actually just pushed out, okay? So this area right here, I'm going to go ahead and get specific about it. This area right here is an area of interest for a retest. We're talking about retest now. Uh, Talking about retests. Let's go ahead and zoom out really quick and see where the retest took place. Boom, there it is. It took some time to get there. As you can see, that price came back up a little bit higher. And the reason why it did that is because there are areas aside from this main one that could be retested. And I'm going to make a video later on, probably this coming up weekend, talking about where you should put your stop losses so that you can avoid situations like this, where you have this bias that price might come back into here. And let's say you get into a sell, which could be premature. Obviously, it was because it went above it. um, But if you set your stop losses appropriately, let's say you got in right here, you put your stop loss like you put it all the way above the highs. Okay. And then if you get in right here, your target for exit is usually based off the activity of the past, which we would address this right here, this movement, and we would put our target all the way back down here. As you can see, if you were to get in this kind of trade, yes, the stop loss is massive. It's 186 pips, but your take profit would be almost 700 pips, which is a 3.7 to 1 risk to reward. So if you're risking $1,000 on a trade, your return on this is $3,700 on one trade because you maintain proper risk management. And on top of that, you put a stop loss in an area where you reduced your chances of that stop loss getting hit and losing that $1,000 because you put it above everything. You put it above this whole area up top here, okay? But still maintain your 3-to-1 risk to reward, almost 4-to-1. All right, so this right here is a great example of retest. Okay, so you have this area here, price does push up above, but eventually comes back in. I'm gonna go down to the 1 hour time frame just so that you can see what I'm talking about here a little bit better. Actually, let me go to the 4 hour. Okay, cool. All right, this is perfect. I like looking at the 4 hour time frame because it really tells you a strong story. When you're looking at the 15-minute, looking for supply and demands and all that, break and retest, it's great. You can find some trades in there, but the higher the time frame, the stronger the signal, the stronger the confirmation. So if you're looking at a break and retest in the 4 hourly, it's going to be a lot stronger than it would be a break and retest in the 5 minute or the 15-minute. Okay, so this situation right here where you had this movement to the upside, boom. And then literally 2 candles later, it came back down below it. That's a nice sign saying that, okay, price came, just wanted to retest something above the box and then wanted to come back into the area where institutional moves have taken place in the past, i.e. this area right here to the left. So we're back in the zone. Price, retest back into this area where we called it a pin bar. It's like a needle, a vertical needle, right? So you have an impulse up and then you have an immediate impulse back down. So it retests this general area, pushes back down, boom. And then it gives you another opportunity to get back into this trade right up here. Perfect retest of that box that we created. I'm going to go ahead and get rid of everything here so you can see a little bit better. Okay. So you see all this liquidity right here, all of these wicks. This is where we're having, this is our point of interest right here. Right, right across there. The candle that actually broke out of that consolidation was this candle right here, pushed straight out. All right, and as you can see, like if I were to draw a line directly across from the start of that candle, you can see that it damn near touched it. Okay, came back up into that zone, retested, and then it was off to the races. It did not come back. Okay, so let's go back to present time. Like I said, wait for the break and retest. Do not get in a buy unless it tells you that it's ready to go up. There's a possibility that it could come back down into this zone and then create a setup like it did here. We talk about double tops and double bottoms all the time. Okay, this is a double bottom. Blue candles down, black candle up. So that's the first leg of the W. And then these two candles right here is the second leg of the W, giving you this last candle being an engulfing candle, which is another signal that it's going to go up, potentially, not always, but potentially. So this right here is a double bottom. If I go to the 1 hour, the 15-minute, it'll be clear as day. Let me go ahead and show you. Okay, boom, just like that, double bottom. Gives you a push down, comes back up, gives you a wick, okay, gives you some liquidation, but also it doesn't close. The more and more you hear me speak on these things about liquidation, price overextending itself like it did right here with this wick, but it doesn't close below. It doesn't close below this. It doesn't close. It wicks down and then closes above. So this right here is still a valid price level. Okay. This is your double bottom. This right here was your retest of this last candle right here that went down. Okay. And then off to the races. So there's a possibility it might come back down. I'm looking into it. I'm not going to get into anything yet. If I do, I might look for price to come into this general area and look to sell it. But I'm not getting into a buy unless it breaks above and then gives me some type of a retest. I'm just not doing it. And I don't encourage anybody else to do it. All right. So that's that. I'm gonna go ahead and leave the video here. If you have not watched Technical Tuesdays from yesterday, make sure you go ahead and do that because there was some big news that I released about some studying that I've been doing so that I can start making this official wealth management advice. I'm studying for all of my series licensing, and eventually this page will be a little bit more official, right? It'll be a little bit more credible than a lot of the other stuff that some of you might be watching right now. But on the same note, I do want to, reiterate the fact that everybody learns differently. I encourage you to take a look at the free course that I have down in the description. It's free, so go ahead and take a look at the videos. It's about 12 to 15 hours worth of content structured chronologically so that anybody brand new can learn it. See if you can learn from the way that I teach. And if I can, great. Join our Discord, watch the video again from yesterday so that you can see what the expectations are for this company and jump on board. But if I'm not someone who you can learn from and you're not vibing, I'm just happy that you at least gave it a try because my goal here is to just empower people a little bit more about what's possible out there because You know, many think that you need all these certifications and diplomas and this education in order to start trading and making a secondary income for yourself, but it's not the case. So whether you stay or whether you go, I'm just glad you stopped by. All right. So thanks again for stopping in. Subscribe, follow, comment, let me know where you're at, and I'll see you on the next video. Have a good night.